This video is a review of Toyota's fiscal year 2025 first half financial results, period from April 2024 to September 2024. Toyota Motor Corporation is a multinational automotive manufacturer headquartered in Toyota City, Japan. It is one of the largest automakers in the world, known for producing a wide range of vehicles, including sedans, SUVs, trucks, and hybrids. Summary. Operating income for the first half of fiscal year 2025 was 2,464.2 billion yen, 95 billion yen decrease year on year. Despite the impact of production halts and additional expenses, operating income was nearly on par with the same period of the previous fiscal year. The full-year forecast is 4,300 billion yen, which remains unchanged from the previous forecast. The forecasted full-year dividend will be increased by 15 yen compared to the previous fiscal year, reaching 90 yen per share. Consolidated vehicle sales. Consolidated vehicle sales from April to September were at 4,556,000 units, which was 96% of consolidated vehicle sales for the same period of the previous fiscal year. Toyota and Lexus vehicle sales were 5,029,000 units, which was 97.2% of such sales for the same period of the previous fiscal year. Due to the impact of halting production to address certification issues, etc., sales volume decreased. In addition, the proportion of electrified vehicles increased to 44.4%, mainly due to the strong performance of HEV sales in North America, Europe, Asia, and other regions. Consolidated financial summary. Sales revenues of 23,282.4 billion yen. Operating income of 2,464.2 billion yen. Income before income taxes of 2,732.0 billion yen, and net income of 1,907.1 billion yen. Net income largely decreased from the same period of the previous fiscal year, mainly due to valuation losses in foreign currency-denominated assets caused by exchange rate fluctuations. This represents the gap between the valuation gains from yen depreciation in the previous fiscal year and the valuation losses from yen appreciation in this fiscal year, so it does not indicate an actual deterioration in business. Analysis of consolidated operating income. Factors which impacted operating income year on year. For the first half, 180 billion yen was invested in human resources and 110 billion yen in growth areas. On the other hand, the effects of foreign exchange rates, cost reduction efforts, and marketing efforts increased operating income by 620 billion yen. Despite sales volume and sales mix, decreased operating income by 140 billion yen due to the impact of halting production. In addition, there were one-time expenses such as the certification issues for Hino Motors engines in the North American market, leading to a decrease in operating income by 95 billion yen year on year. Geographic operating income. Operating income of Japan decreased due to decreasing in sales volume and step to strengthening foundation of suppliers. North America decreased largely due to deterioration in sales volume and sales mix, and increase in labor costs. Europe and Asia increased mainly due to cost reduction efforts. Shareholder return. Interim dividend will be raised by 10 yen compared to the previous fiscal year, bringing it to 40 yen per share. The forecasted full-year dividend will be increased by 15 yen compared to the previous fiscal year, reaching 90 yen per share. Toyota will continuously increase dividends in a stable and continuous manner to reward long-term shareholders. Toyota also will continue to conduct flexible repurchase of shares while considering factors such as the share price level of common stock. Stock price. This is the Japanese yen-based chart for the last 1 year. The Japanese yen stock price is 2,662 yen as of November 8th. And the US dollar stock price is $178.45 as of November 7th. Current PBR is 1.02 and PER is 9.7. Dividend yield is 3.38%. Compared to the last few years, the current stock price is relatively cheap. The stock price fell because the company's earnings forecast for the current fiscal year was below expectations. Conclusion. While other Japanese automakers have revised their forecasts downward, Toyota has kept its original forecast unchanged, and as Toyota's forecast is always conservative, it is likely to be completed as planned for this fiscal year. Except for one-time expenses such as the certification issues for Hino Motors, overall vehicle sales are going well. Dividends are expected to increase this fiscal year again, and financial situation remains good as usual. It's still a good stock to hold for a long time.